No doubt 2024 was my best trading year to date. Nearly 20 100% call outs, three names over 500%. The hard work paying off. And I feel as though we were one step ahead this entire year. We mapped everything out, gave you the blueprint from day one that this was going to be a life-changing bull market. You do not want to miss it. And unfortunately, retail got caught up in the bear thesis, this market crash narrative that did the literal opposite. I want to share with you some of the plays that were top on my list for 2024. And at the end of this video, I want to share with you my top 5 names going into 2025. These are multi 100% opportunities. TerraWolf took the top spot, 597%. ARC M, Presto, Vuzi, Chromadex, my personal favorite, GameStop at $18 before Roaring Kitty, before the public or anyone said Squeeze 2.0. We were all over GameStop, gave you the best entry and exit. EGIO was a bankruptcy play. Cardial, Brett, my number one meme coin of this cycle. And then some of the larger names, Robinhood, Tesla, MicroStrategy, Coya, NRSN, Carvana, and Gain Therapeutics. Some honorable mentions, Bitcoin, Peggy, Oxbridge, and Coinbase. The first stock on my watch list going into 2025 is Cidara Therapeutics, ticker CDTX. What's most impressive to me is the financing the company has received over the past 9 months. The first round was $250 million PIPE, which is private investment in public equity from Canaan, Bain, and RA Capital. These are very intelligent and strategic biotech investors. Many successful exits here. This is not some garbage $2 to $3 million syndicated Wall Street deal with your typical toxic investors. This is serious money, very big size. And if you read the fine print of the PR, they bought back their drug from Johnson & Johnson for 90 million bucks. So the fact that at that moment in time, it was valued more than the business itself, was a larger transaction than the entire market cap of Cidara, was insane. Fast forward a few months later, they just raised another $100 million. So that's 350 million USD within the past 12 months or less. It's ridiculous. And people are sleeping on this stock because it doesn't trade a lot of volume. But when you actually look at the liquidity, it's trading 553,000 shares at an average of $24, $25 a share this week. That's 13.2 million USD this week. That's a lot of money. And I don't think people realize how gradual this volume has been increasing. Right, we see it pretty much flatlined from March, April, and then has been curling now. And the one thing I really like when comparing stocks in terms of the volume and the price is to have a direct relationship. Volume analysis shows us rising price, rising volume is a bullish interpretation. That is my perspective on Cidara. And I think if you knew nothing else about this business at all, you just looked at the people involved, the type of size they're putting into the company, think 1, 2, 3 years down the road, because Wall Street is always forward looking. They don't care how long it takes. And understand that this stock did a 20 to 1. So this has a lot of upside potential, a lot of gaps to fill here. And again, was trading at multi-$100. So when we actually look now on the weekly, what are we noticing, right? This 200-day EMA, it just tapped at 27.99. Call it 28 to be fair. The last time it tapped above was back in April of 2016. This is a very significant level. And again, why I'm telling you at a significant price. This is without a doubt a $35 to $40 stock just based on the cash and the investments from my personal perspective. But again, you let me know your opinions in the section below. Have you traded this name? Have you messed with biotechs in 2024? Feel free to let me know again in the section below. Next stock is OXBR, Oxbridge. This is in the RWA space, real world assets. Specifically, I'm focused on the 2 subsidiaries and the spinoff of Surance Plus, which is focusing on tokenizing reinsurance contracts. There is no other stock or publicly traded vehicle like it, which is why it's so unique. However, I don't want to get too in-depth into the company and the subsidiaries. We could talk about Zonix and its partnership with XRP in the crypto crypto space, but we know crypto in general is still early adoption. It's still only 5 to 6% of the people are invested. Most of those percentage don't even really truly understand it. So we're talking about a subcategory of RWA, which is ultimately where the future is. You look at BlackRock, they're driving or forcing incentives, forcing narratives in the market. This is ultimately what's going to be the future, but it's going to take time to get that public recognition. That is why I'm bringing it to your attention right now. We never want to buy when everyone else is. We always want to buy when no one wants it, when people are unsure, when they're fearful, when the stock is at an undervalued price. That is what we're seeing right here. And again, let's say 6-12 months goes by, the stock's at $10 or $15. You're going to be kicking yourself and saying, why didn't I get in at 3 or 4 when nobody wanted to own it? That is what separates the winners from the losers. The people that have the largest percent gain, without a doubt in my mind, is going to trade at multiples over the next 2 to 3 quarters. When that public recognition hits, there will be an explosion in speculation, and I believe in the tokenization, which is the crypto sector of RWA. Stay tuned for Oxbridge, not a name that you want to sleep on. Third is APRE. Really like this name because it's super beat down. When you zoom out on the chart, it was $1,000 a share, massive gap as you could see. And the more you zoom in, you could really understand that this stock is legitimately like 99.5% down. So you're buying at a very low risk, very high reward in terms of that asymmetric setup. And for me, you're risking a very minimal downside for a multi-points upside. And we just look at 2024 alone. I'm not going to look at 2, 3, 4 years back. Just in the past, 8 to 10 months, we're seeing a high of nearly $9. From where we called it out at 295 to where it would be to the top there, pretty much would be around 200%. Okay, so 200% here, pretty much from the top. If you're getting it anywhere at these levels, anywhere in that 130 to 160 range. And I think that's very fair for a minimal downside, 10 to 15% downside at most, in my opinion. And really, if you do want to get super optimistic and we can look back at these levels, this should really be an easy $15 to $20 stock if the news is good, if Q1 and Q2 show some positive results for the stock. But again, I don't want to waste too much time and go in depth. I have a separate video on APRE. If you want to check it out, it'll be in the top right corner below. Please feel free. You'll learn everything you need to know about the company moving forward. Next is LiveOne, ticker LVO. Everyone knows my opinions on this stock. I've done numerous videos, plenty of posts, reiterated it very heavy at the bottom when it dropped. Again, when you look back historically, I think the fundamental component of the company is what really stands out to me. It's not like it had 1 or 2 good quarters. It's had multiple years of consistent growth, being cash flow positive, debt-free, having very strategic and intelligent backing with successful exits, proven track record, very, very competent management, no bad financing, no garbage dilution at all. And that is the qualities of strong, successful businesses. That is why I'm so confident at screaming it when it dropped 30, 40% to reload, to go long at 50, 60 cents. And for anyone that listened, this popped right back to 180 super fast. That was over 230% upside from the low. If you average down from 130 to where you are now, you should definitely be profitable, 40, 50% upside. If not, you're definitely above break even here. So we doubled down. We feel really confident about it. And I think going into 2025, this should be a $250 stock. I think optimistically, we could see $3.50 plus, but we want to take it one step at a time. It needs 3 to 4 quarters, I think, to really recoup, to regrow. And again, it's never about the action itself. It's never about the bad quarter, the bad PR. It's always how management responds to adversity, how it responds to these very down periods. Okay. And the way that it's bounced back organically is extremely healthy, in my opinion. Again, all of these stocks that I'm giving you are going to have very similar qualities: good management, tight cap structure, plenty of cash, no garbage or bad dilutive financing. That is what we want to see. That is the companies I feel safe in taking those bets. So LVO, another name that you must keep on your radar going into 2025. Next is SurgePays, ticker SURG. The first time we called this out, stock was trading at $5. It ran to a 3 to 4 year high. The main source of their funding was the government money or the ACP loans. Stock was trading at $6 to $9 during that period. Once the contract went away, that is the cause for the stock falling off. However, it was sponsored by JD Vance. Now that he is the vice president, it could seriously be back on the table to be re-up. If that's the case, we know there could be incredible upside, which is why I'm bringing it to your attention right now as it sits on a 7 to 8 year low. The stock is not traded at $1.80, I believe, since 2016, 2017, has 400% upside if we can get back to those highs. Even more importantly, what I would like to use as a gauge going long or as a hedge is to look at their last financing deal, which was extremely strategic, definitely for the business. They raised $15 million at 560. Prior to that, they never raised any money since IPO. They were very strategic with doing that. That's why their cap structure is super tight. They still had plenty of cash on their books. And during that time, when the contract was flowing, they were cash flow positive. So definitely something to make a mental note of. At 560, that'd be 200% upside from where we're trading currently. So just a mental note there in terms of the profitability from that issuer. The company did a fantastic job of taking advantage of the sentiment in the market, raising money. So now they don't have to dilute at the bottom. They don't have to dilute and raise money at the dead bottom. That's fantastic. So definitely, again, a name that you should keep on watch just on that principle alone. I don't know how it's going to play out. Obviously, no contract. I don't see the stock exploding back to $5 or $6. But with those circumstances, like I said, it's definitely a top opportunity, definitely a way better percentage upside right now than it was even when I recommended it at 5. And I really did love it at 5. So definitely something to make a note of. SurgePays, SURG, which takes us into the next one, Coya Therapeutics, ticker COYA. We gave this out at 475, 480 range. It ended up breaking all-time highs, ran 1069. If you look on the extended hours chart, it touched 1101 in pre-market. So definitely over 100%. That was one of my top plays for 2024. I think this company is a prime candidate to get acquired, to get bought out. I've been saying that since, Q2, Q3 of this year. It's all just a matter of when. I don't think it's if. The news has been really solid overall. I feel the same way about GainTherapeutics, GANX. This is just a smaller name. Gave this out at 148 this year. It went to 320. I think it's going to go much higher. But two stocks that are sleepers. They're not very well known in terms of the retail community. It's not like a super trendy or highly liquid name, but definitely two prime candidates that you should keep on your radar, Coya and Gain. That is what I'm optimistic for. That is what I'm going to be looking forward to. But again, there are so many names. I could rifle off a bunch of them in terms of the large caps. If we switch it up, Tesla, love Tesla. I don't think you could bet against it long term. Coinbase, another one that's going to be huge for this cycle. Robinhood, one of my top call outs in the small to mid cap range. I think this one's going to all-time highs, could even be $100 plus stock here. Another one, MSTR, at least for the sentiment right now. If people think Bitcoin's going 150, 200, this thing could have 500 to 1,000 plus points in it. So there's a bunch of names all across the board that I can give out, from small caps to penny stocks to even the biggest names, right? But the main thing here is that we have to understand value. We have to understand the sentiment and the time period and upcoming events. Catalyst and news are the main drivers of these stocks. You have to really ask yourself, what is going to make the stock move? What is going to make people want to buy this name? Okay, so those are just some things that I like to ask myself over and over again. But really, this year has been absolutely incredible. Let me know in the comment section below if you're someone that has been making money with us. Let me know your number one play, your top gainer stock of the year. And also, if you have enough vulnerability, let me know your worst performing stock in your portfolio this year. I know that's tough for many people to do, but again, we have to learn and grow from our mistakes. So if we're ended up losing in plays, which should be, everyone should lose, they should be quick cuts. But if you did, unfortunately, take any big losses, please let me know in the section below so that we can learn and grow from it, so we don't make the same mistakes in 2025. So again, there's a bunch of other stocks I didn't mention. It doesn't mean that they're not on my radar. It doesn't mean that I don't think they have incredible upside. But if you think I missed any names, if I should have put any on the list, please feel free to put me on. I know everyone has the top stock in their eyes, so I would love to hear from you guys. Besides that, have a fantastic week. And as always, we'll see you in the next one.